Hello and welcome to Moving Iron Podcast Markets with Chip Nellinger. Say that all over again. Holy crap. Hello and welcome to Moving Iron Podcast Markets with Chip Nellinger. Chip is with Blue Reef Agmarketing and holy crap. Start over. Hello and welcome to Moving Iron Podcast Markets with Chip Nellinger. Chip is with Blue Reef Agmarketing in Morton, Illinois. Chip, how you doing?
Hey, doing real well. I haven't talked to you in a while, Casey.
It's been a little bit, man. How things been?
Can't complain. Fall is here. We went from summer to fall, and real quickly, it was, 92 to 52 for a high. So,
yeah,
I love it. I love fall. It's here.
Fall is one of my favorite times of year as well. Plenty of stuff going on, man. Speaking of fall, let's talk about the crop progress report, and harvest reports and stuff like that have been coming out here of late. And they are basically at all-time lows. So I think every report I've seen showed that there are significant amount of machines not running right now in the field, and what's being cut is just slow and easy. Not so much because of crop or field conditions, but maybe just overall maturity of the crop.
Yeah, we have a little bit of everything out there. And as you mentioned, one of the slowest harvest progress paces in history. Corn and beans, both. Obviously, the latest planted crop in history, so things are going to mature slower. As I mentioned, we've got a nice batch of cold weather here, several, hard frosts now in the upper Midwest, some immature crops that's probably going to, zap a little bit. Probably took some top-end yield off, but more importantly, when you have corn that's immature and hasn't quite black layered or just black layered, it slows the dry down process. So it's a lot of challenges out there for farmers right now. We had that snowstorm a week ago in the upper Midwest. There looks like there's another couple of systems moving through here in the next 10 days or 2 weeks. Could be kind of rain, snow, depending on where you're at. So it has been not an ideal start to harvest. We're here, Pat, in the second half of October already. And this thing is getting slower and slower. So I think that's one thing that's helped support the markets a little bit is it's a late harvest. And in a late harvest, you aren't adding bushels to this thing. You're just taking it away. From number one, the crops that are mature on the corn side, if you have to stop for a few days due to rain delays, sun pops back out, it dries down a little more. You're leaving yield, kind of that phantom yield loss out there. Obviously snowy, windy, rainy conditions, beans that, take on moisture with rain and then dry back out. You're subject to, having the pods pop open and dropping beans and leaving yield in the field. So I think in the market's mind, the crop is slightly shrinking. It's not growing at this point. The later harvest gets, the more that's going to be an issue. So that is definitely one supportive factor that we've seen the last 10 days here.
Yeah, that is one thing that I want to talk to you about as well is here we have this, while we've been talking about this over this entire planting season and all the way through the growing season, the USDA has really been on this, we're going to have the exact same crop we've had last year. Everyone's kind of throwing that flag around. With all the delays and with all the prevent plant and everything else that we saw happening, several outside companies have come to the table and said, I've heard 155, I've heard 159, I've heard 162. What's your feel right now for what kind of some of those outside analysts are saying? Like, what's your feel from what you've been reading, what you've been hearing that the final crop number might be?
Yeah, that's going to be debated for a long, long time, maybe years to come, quite honestly. So here's the problem. In the back of my mind, you continue to hope that the USDA kind of gets this thing figured out. The October crop report, they're looking at a fair amount of data, and you've got crops that are mature enough. In some areas in the South had already been harvested. They've got a lot of good data out there, and they went up 0.2 of a bushel, right? And that was a head scratcher. Here is the problem, and they only have 2 more cracks at it, right?
Right.
They adjust production potentially in the November report here in about 2.5 weeks. They don't do anything other than supply and demand. So they would adjust demand potentially in the December report, and then you've got the final January report. So they only have 2 more cracks at this to get this right. My brain, just like everybody else's, thinks there's only one way to go, and that's lower in corn yields. It's just inconceivable to me that we can be within 8 bushels of a year ago with the type of year, spring, the whole growing season, and now the fall that we're starting to have. There have been a couple times in the past that you've seen big adjustments lower on either the November or the January crop report.
Right.
But I think that we really have to start worrying about the fact that the USDA may not lower this. And they may, on that January report, they may not go significantly lower on harvested acreage. In spite of what everybody thinks should be a big cut on either planted or harvested acreage. So, they only have 2 more cracks at this. We've seen a nice rally, $1+ rally in beans. We've seen, I don't know, 50 cents basically in corn from the lows. In our mind, you have to kind of protect this thing, because if they don't, you can't put all your eggs in one basket thinking that the USDA is going to lower yield and or acreage dramatically. I think that they should, but that doesn't mean that they will. And if you're out here, with not much grain sold, this is a perfect spot for some sort of protective measures to lock some stuff in. We very definitely have a demand issue out there, especially in corn, with or without a China deal. We have demand problems in corn and plenty of world competitive supplies out there. So, that's what we're trying to refocus our clients. This is not as high a level as maybe you would want to price some things. There's some option strategies out there with puts. There's minimum price type contracts. There's all kinds of ways to help protect yourself. We could be heroes. You could hold it all out to January and say, man, there's only one way to go, and they're going to cut yields dramatically, and they're going to cut acreage dramatically, and you could be a hero. But boy, if they don't, if this is the crop size and it's 168, and even if they cut 1.5 million corn acres out of this in January, that's not a $5 number. And, you get South America growing without a problem, we have got some issues in this thing. So it's a great question. Everybody's going to be debating that, but I'm just starting to take the other side. We only have, if this is back in June, you're like, they've got the whole season to figure this out. Now you're sitting, they only have 2 more cracks at it, and their track record here with the acreage situation, and you got to scratch your head and say, boy, what if they don't adjust things lower?
Exactly. Yeah. And that's kind of the biggest fear that I've had right now as I look at what's going on, that there's this optimism in the marketplace that, we're going to be down to 150-ish somewhere, high 150s, low 160s. And that's going to be a 10 or 15 bushels per acre drop off. And that's just going to send everything going crazy. And, to your point, what the USDA has done here the last few crop reports, I'm really looking forward to what happens in the November crop report. Just like you said, that could be a huge adjustment time frame where they're making that, because they did that back in on the September one, right, where they made that big adjustment in crop.
That was the September crop, the stocks report. They made that
big adjustment. Yeah, and so it kind of maybe tells me that they're maybe going through some corrections that they're making. But you got Senator Grassley out there talking about how there needs to be, more or less investigation into what's going on in the USDA and how they report and stuff. So, there's all this political fodder going on right now that with being a election year and what have you. There's just plenty of that crap going on, but it's going to be a fun ride no matter what happens. There's going to be plenty of volatility in the marketplace, which opens up a lot of opportunities to make some money.
Yeah, absolutely. Absolutely. And we preach it all the time, right? You've got to have a plan, and there are ways and strategies to kind of let you have your cake and eat it too. There is too much money at risk to bet at all that the USDA is going to get this thing right. A little more confidence than I have in them. You mentioned Senator Grassley. Sure, there's all kinds of anger and frustration at the USDA, but more importantly, they've really screwed up this renewable fuels thing, and that's unfortunate, and that's just another tiny little chink in the armor of corn demand, and it just doesn't look like that's getting better, and so I'm a little bit fearful. You're out there. We're kind of keeping an eye on the 2020 crop. You're over $4. I think you're bouncing around about 410 ish on the D's 20 corn crop, and up around 980 ish on the November 20 beans. You gotta keep that in the back of your mind, because if it is a 168 corn yield, 167 at this point, I could see them dropping 2 or 3 bushels, maybe a million or two in acres on corn. That'd probably be about the max, and that would help us. That'd probably give us a rally out into late winter, early spring. But if they don't, we got big issues out there. And if we do have a 168, 167, even a 166 crop with the conditions we had, we're likely going to plant 1.5 million, 2 million more corn acres next year. We ever get this ship going straight with the wind at our backs and start to finish good weather, we're going to raise 180 plus bushel national average yield. And then we've got some real problems with big carryouts. So you have to be in defense mode, in my opinion.
Yeah. So let's talk about soybeans here for a minute. You can't talk about soybeans without talking about China.
Oh, yeah.
So Trump was putting out all those tweets about how you need to buy more land to get bigger tractors and all this happy horse shit, And basically right now, China was supposed to come to the table and buy a bunch of stuff from the U.S. again, but they haven't done that yet. And right now it looks like I'm reading an article here from Pro Farmer where they had China had bought a bunch of Brazilian beans, which they've been doing for the past month and a half anyway. But they bought another 480,000 metric tons of soybeans since Monday, I guess. And that's a fair amount of beans to be buying when they're supposed to be buying it from us. But I guess what's your reaction to the soybean market right now? It's kind of like that silent sleeper. Corn is really taking that front stage look to everything that's going on around them, and soybeans have kind of taken that back step. Usually, when they're the ones that's kind of leading the charge on the markets, but right now soybeans have fallen off. What's your thoughts on the soybean market?
Well, kind of similar to corn, right? I mean, I think that based on some of these bean yields we're hearing, there's some bad ones, but it just seems like 55 to 65 is pretty common. You get out in this part of the world, and that's call it 8 bushels on the low side to as much as 15 to 20 bushels on the high side below a year ago. So I think if there's any argument to be made in cutting yields further, it would be on the beans. Again, they only have 2 cracks at it. So what's the confidence that they are going to get this figured out in beans? China has picked up their pace in buying U.S. beans here. They bought a fair amount of beans, over the last 3 or 4 weeks. I think they were in there again this morning. I think 58 million bushels of beans sold on the export sales report. So they are in there. Big pork number this morning. So they are there. Here's the problem with that whole deal. It's been 18 months now, or going just shy of 18 months, I believe, to this whole tariff trade war thing. It's on again, it's off again. Remember, we've heard this story before, right? It's going to be the biggest, we're not going to be able to produce enough. And the problem with those comments are it raises the bar so high.
Oh, yeah.
There's only one way to go, right? You're not going to jump over that bar. You're not likely going to have to buy more land and buy more tractors. And it sounds good in a press conference and on a tweet and a 12-second news clip. But the reality is it sets the bar too high. And so, and also, I think that there's a chance, that's not on paper yet. The ink isn't on the paper yet. And I think there's a fair chance that this thing falls apart too, and then we've got real problems. Yeah. Because if it does fall apart, it's probably going to last until after the election.
Oh yeah,
and that's a long time.
I got to think the Chinese are they're not in a big rush to do anything until after the election comes and see what happens from there. I don't believe that. I don't believe that they're going to be like, oh, we got to hurry up and get something done because
Well, it kind of plays in their hands, right? Maybe they need some beans right now. They definitely need some pork. I believe this morning was a day delayed because of Columbus Day. I believe this is the largest pork export sales number ever. Massive amount of pork they took, right? So plays right into their hands, right? Because they're going to demand that we take away or at least lower some tariffs in goodwill. I'm not sure that this current administration has that in their mind, right? So I still think there's a chance this thing could fall apart.
Yeah.
And again, it goes just back to you got to play some defense in here. You know, we've had $1 plus rally in beans, 50 cents in corn. Think back to how you felt 4 weeks ago. It was pretty bleak out there. It's a lot better now. You know, you got 60 bushel beans at $60 an acre, just got put back in your pocket in 4 weeks. Gotta look at playing defense in here, in my opinion.
Yeah, and that's to your point. I mean, that's the other thing that the media that kills me about the non-ag media that reports on this stuff. This is the typical time of year when China's going to start coming and buying soybeans from us anyway. You know what I mean?
Yeah, exactly.
It's typical time, right? I mean, same with hogs. Typical time of the year, they're going to be buying hogs from. I mean, now granted, they don't buy that much, but they bought an incredible amount. But from now through till spring, and this is a pretty typical time for them.
Exactly, seasonally, yeah.
You know,
South America they're depleted in their supplies. They're planting in the field. Their big export push is over, and now it comes to us. We're cheaper, obviously, because of the tariff situation.
Yeah.
It just it kind of gets bypassed by people, and it is easy to look over, right? Because you're all excited about, boy, we're gonna, we're not gonna be able to produce all this stuff that they're gonna buy. Well, we'll see.
Yep. So hog market, we talked about that kind of here intermittently hit and miss. Big news with the export report that came out. But that African swine fever is just the gift that keeps on giving. That's over into the Philippines now, all the way through basically Southeast Asia and over into the oceanic countries. It's getting to be a bigger problem than what we even started with when China first reported it. 18 months ago, 2 years ago, something like that.
Yeah.
So that is going there. But the hog market is really slow to react to that news. Talk about the hog market a little bit and what you see happening.
It has been, and it's a little frustrating. Here's the issue. Much like the grains, we have essentially between 2 and 4% a year expanded the hog herd for like years straight, several years. We have a lot of capacity to produce hogs in this country, and we're efficient, and we're the best at the world at it. But the problem is we have a massive supply of pork. So we're coming right at the end of what's normally the weakest cash period for hogs. And it has been disastrously weak cash hog prices. So we have this glut of supply to get through, and exports have been okay, and China's been buying, but it's a spread issue, right? You look out into the summer months, next summer, you're over $90 on hogs out there. So I think recent high in like July hogs have been 93, 94 range. That's historically pretty high with all-time highs. I don't remember, I'll get skewered for this, but somewhere around 115, 120 all-time highs, in years past. So historically, we're pretty high out there. And again, I think if you're a hog producer, you got to be a little defensive out there, put some sort of a strategy in to protect that. But that's been the problem. We got to get through this huge supply glut, which plays right into China's hands, right? If they're taking that right now, they're not stupid. They're the best traders in the world.
Right.
They know they have the biggest appetite. Physically, they need these products, whether it's soybeans, soybean oil, pork, beef, you name it. They have a big appetite. They're not stupid. They're the most astute traders in the world. This plays right into their hand. They're picking up pork at the cheapest seasonal price that you can. So, I mean, it plays right into their hands. It's good business. Record pork sales this week, all-time record. Maybe they're going to be in there for more. Likely they are. But, we've got a big supply to give them. So hopefully they are there for the long haul.
Yeah. Yeah. So they're buying stuff seasonally right now. It's not, and they're buying big chunks of pork because they absolutely need it. I'm just reading an article here on AgWeb, on a Pro Farmer, that they're talking about how the Chinese pork production is down 17% from a year ago. So that's quite a bit considering what they've been down previous year before that. I mean, so that's an incredible.
Yeah, is that year on year or month? I think that might be month. right? Because
the first 9 months of 2019, China produced 31.81 million metric tons of pork, a 17.2% decline from the same period a year ago.
Yeah, I saw a stat earlier, either late last week or earlier this week, that their month-to-month fluctuations are going down double digits. So there's a massive problem over there.
Yeah.
But we'll see if that ends up being a long-term deal or a one-shot type of a thing. I think the next 3 or 4 weeks will tell the story on that. I have a feeling if we won't give in the way of lowering some tariffs as a goodwill to this thing's gonna fall apart quicker than it got here. Yep. But we'll see.
So cattle market has had a fairly nice rebound since the Tyson fire and that whole debacle, and all the USDA investigations with how that all fell apart, and with packers and what have you. I guess, what's your thoughts on the cattle market right now, and is that something that can sustain that rally, or is there getting to be some technical pressure you're going to start seeing here?
Little of both. I think some of it, again, has been seasonal and structural. So we had that plant fire, big uncertainty, big washout. The funds get out of everything. They get net short. I think biggest short position ever for the funds at the lows. We had a lot of hedged cattle in a time where there's big supplies, and we're kind of past that. So plus you had a little bit of federal pressure on the packers, right? Saying, right, hey boys, we know that this fire was real and all this, but you're making ungodly amounts of money on every animal you kill. Maybe you want to give a little bit. So I think some of that was behind it, but more importantly, it's a seasonal type thing. We're coming into the time frame now where your supplies are shrinking. Seasonally, as you go into winter, we've had that snowstorm. You start talking about more bad weather into winter, and you could see some upside. With that being said, though, we've had about a $16 rally straight up off those lows, and people, myself included, are quick to forget, right? It literally felt like the world was ending 5 weeks ago when we were on the lows in the cattle market. And in a lot of ways, it was. Because if we kept going, you were going to see a lot of feedlots being put on the auction block. It was a bad deal.
Bad deal, yeah.
And now it feels better, right? This is a lot like corn and beans. So could there be some upside? Absolutely. There could be another $6, $8, $10 of upside. But boy, you got to kind of take this and say, what did that feel like 5 weeks ago at the lows? We've had a $16 rally straight up on a chart. Forget the fundamentals, tight supplies, plant fires, demand. Just look at a chart. December cattle are at an area that's going to give us some resistance. Eventually we could get through there. But these deferreds are even, better, the February, the April. And I think you got to be starting to look at, these levels as an opportunity to take some risk off the table in some way, even if it's just buy a put, spend $3 on a put. You still have your top side open, but boy, you're one more plant fire. It doesn't even have to be a fire, some sort of a mechanical issue. It's not like we've got the most updated, state-of-the-art brand new plants out there. They're old, they got age on them, and they got problems, and sometimes they got to take downtime.
Yeah. Okay. All right. One last thing. We'll close it down here. Let's talk about the export report that's coming out today. So these export reports, especially this time of the year, have a big swing on what's happening in the market right now. And it looks like there's plenty of optimism out there for what the traders are expecting to see in this report today. Talk about what your expectations are and what you see happening.
Yeah, so we did have the export sales report out. Probably a couple of the highlights. Pretty good bean number, I think about 58 million. I believe China was in there, no surprise there. The wheat number, a little bit disappointing. The corn number, pretty disappointing. It was only 10 million bushels of corn. That's disappointing. That underscores the demand issue that we have in corn. Sorghum was pretty good for sorghum. What I didn't dig into it yet. That could have been China, could have been unknown. Again, if there's one thing China needs, sorghum is on the top of that list, most likely. And, I think on the grain side, it was just so-so. I think it was probably helpful on beans, wheat, and corn, probably a little bit disappointing. And we've already talked about the pork side. That was a record amount of pork sales for 1 week, massive amount to China. They bought a big chunk of for this year, and also like 58,000 tons for next year for the 2020 delivery. That should get a nice jolt under the hog market today. If this doesn't result in sharply higher to limit up in hogs, then we've got too big of a supply. So this is going to be an important day for the hog market, technically, to see how we close with this big export sales number. If we can't be sharply higher, we've got some structural problems in this thing, and you got to take that for what it's worth. So I think the close today is going to be really important in the hog market.
Yeah, looking forward to see what happens there. One last thing too before we shut this down. On the wheat market, there's looks like the Australian Australian National Bank has basically dropped the wheat crop from their projected 18 to 19 million metric tons down to 15.5 million metric tons. That's a pretty big swing. Anywhere from 3.5 to 3 million metric tons. That's quite a bit of wheat. What effect is that going to have on the overall wheat market right now as we look at the issues that we've had with the crop we've gotten and the issues we're having just getting stuff put back into the ground again?
Yeah, I think a couple things. The wheat market is such a world market that it's kind of like, the rising tide lifts all ships. So number one, you've got the Australian situation, and not a surprise there, right? They've struggled with dry weather for 2+ years.
Right.
So they're shrinking there. The Russian domestic wheat prices have continued to rally. There's been some business done. Obviously, the United States hasn't been benefiting from a lot of that business, but there has been some good business done in the world, and world wheat prices are just on a slow, steady grind higher. So again, the rising tide lifts all ships. That has helped. Wheat, has been an absolute dog for 3 years, and the funds have been short for 3 years. And they're finally, if you look at a chart, the wheat market looks as good as anything right now, technically. So I think the funds are out of their shorts. They're starting to build a long position. You have to look at that as opportunity. Historically, the last 3 or 4 years, they have had longs, but they haven't held those longs very long. So this rally is an opportunity, particularly on new crop, 2020 prices, to look at some hedging strategies, protect yourself. It's like anything. The world is better at producing crops now, and we have big supplies out there. In spite of the, some of these world crops, Australian crops shrinking, maybe the Russian crop not as big as expected. You've got to really keep this in the back of your mind and say, hey, it's been a long time since we've seen this nice of a rally in wheat. The funds are long. Technically, it looks good. It's not going to last forever. Look at it as an opportunity.
Right on. All right, Chip, plenty of stuff going on. If people have a plan or want to work on a plan and have you review that, what's the best way for them to do that?
Yeah, best way is just contact me at our office, 309-550-7213. Love to chat with you. If you're going back and forth in a tractor and you're bored and you're worried about the markets, you're worried about what you're going to do, give us a call. We'd love to chat with you and, kind of help you out with our philosophy and take a snapshot of what your plan is and some advice on how you might be able to improve that.
Right on. Well, I'm Casey Seymour with Moving Iron Podcast. You can find this podcast on iTunes, Google Play, Stitcher Radio, TuneIn Radio, Spotify, and the Global Ag Network. You can also hit me up on Facebook, Twitter, or Instagram at Moving Iron LLC. And Chip, till then, have a good one, and we'll catch you down the road, bud.
All right. Have a great weekend.